I'm Matt Bashard with REIT.com here in San Francisco for REITWorld 2013. Joining me for this CEO Spotlight is Amy Tait, the Chairman and CEO of Broadstone Real Estate. Amy, thanks so much for joining us again.
Thank you, Matt. My pleasure.
I'd like to start by talking about Broadstone Net Lease. Can you give us an update on how things are going so far in 2013?
Terrific. We're sticking to our knitting. We're making some great deals. We're up to about $750 million of assets, still fairly small compared to the other public REIT operators that are here. But for us, the most important thing is what are the per share results? How are we making money for our investors? And because we're small, every acquisition we make has greater opportunity for accretion to our shareholders. So we've grown about 50% in size over the past year. And what that's translated into for our shareholders is nearly a 15% growth in AFFO per share this year. That's even better than our 6-year track record of 10% annual compounded FFO growth because we're getting so much accretion from the acquisitions that we're making.
I also wanted to touch base on last year's launch of Broadstone Homes. How has the single-family rental business progressed, and any updates you can give us there?
That is another very exciting industry, and there have been a lot of developments nationally on that. We're still a very small player, taking our time to learn the business from the ground up, one house at a time. And at this point, we have about 100 houses, so we're starting to get a statistically significant data set, and we have entered 3 markets now. We started in our test kitchen in our backyard of Rochester, New York, which has some of the best school districts in the country, nice, stable income, and stable housing values. Prices never went up, they never went down. To get some experience at the other end of the spectrum, we also entered West Palm Beach County earlier this year, where there's been lots of distress and lots of opportunity to learn about how to buy in distressed markets. And then finally, we're most excited about our most recent entrance into the Minneapolis market, where there we're getting just the right balance of a little bit of distress, but great opportunities for economic growth from all the Fortune 500 companies that are headquartered in Minneapolis that will drive job growth, household formation, and ultimately housing demand and rent growth. So we're looking at Broadtree as an opportunity for long-term income, not a trade. We like HPA, house price appreciation, but we're really looking for growing income. And now that we've gotten a little bit of experience under our belts, we think we'll be in a great position to participate in the consolidation that's going to take place in that market. And it's huge. There are 15 million families today that live in a rented single-family home. And if you add up across the board all the big institutional players, including Blackstone's 40,000 homes and all the other public REITs that own, that might be 200,000 homes all totaled. So there is a huge consolidation wave, I think, about to take place, already starting to take place in the single-family home rental space. And we see a lot of parallels to what our family saw in the multifamily apartment space 2 decades ago.
And lastly, the last time we spoke, you talked about how the Jobs Act was impacting your company. Have there been any developments there?
Absolutely. Another exciting thing for our company this year, in April of 2012, when the Jobs Act was approved, it talked about approvals for what they called general solicitation. And the SEC missed all their deadlines and took their time at defining the actual rules to go around this. So everybody had kind of stopped holding their breaths waiting for this to happen. And during the summer, all of a sudden, they came out with new regulations with 60 days notice that became effective September 23rd. And I'm excited to say that we were not only the first real estate company, we were the first company in the country of all types to file as what's now called a 506C registration, which means that we're under Reg D, our only investors they have to be accredited investors. And our minimum investment, for example, in Broadstone Net Lease is $250,000. But it used to be we couldn't even talk about it to anyone that we didn't suspect was a millionaire. That meant we couldn't have a good website, we couldn't talk to reporters and be specific about what we're doing. We couldn't have even gotten into too many specifics in an interview like this. Now, we also launched a new website on September 23rd. We've gotten thousands of hits to our website. We've gotten dozens and dozens of people coming and asking for investor packets, which they can now get by just clicking a button on broadstone.com. And we think that that will translate to new investors. That's very exciting and a real change in the market because investors can find us directly. They don't have to belong to our country club or have to go through their investment advisor. And our REIT only passes through 0.5% for marketing charges. Compare that to a public non-traded REIT that uses a broker-dealer network. 10 cents of every dollar still goes out to pay the broker-dealer commissions. So this is a really exciting and new, very efficient way to raise equity, and we're kind of holding our breaths to wait and see if accredited investors are going to figure this out and find their way to us. So very exciting.
Great. Well, it certainly sounds like there's a lot going on.
There is, and love to have it that way.
Great. We look forward to hearing the update.
Thank you, Matt.
For more on this and other REIT news and analysis, be sure to visit REIT.com.